All right, everybody. Welcome to Dr. Chef's Crypto. This is Crypto101 Part 2. This is how to figure out how to analyze charts and that kind of stuff. Now, let's start with this. I am not a formal financial advisor. This is not official financial advice. Look, if you want to take official financial advice from somebody in a Baby Yoda drinking shirt, that's on you, because you definitely should consider this more of a entertainment and education forum than official advice. So let's move on to talking about how to figure this stuff out. So now you're secure. If you don't know what I mean, go back and watch part 1. You have your main site set up on your computer. You've got your notebook. You've got all your stuff secured, your two-factor authentication, and you're ready to make a move. And you want to take a look at some of these things and you want to figure out what is really going on. Which one should I invest in? What should I do with my money? So, first of all, let me approach it like this from a really stratospheric overview concept. First of all, you've got a couple options. First of all, there's the big overview of who you are in crypto. Are you here to play around, or are you here to try to get serious and make serious money? That's part 1. Now, if you're here to play around, then none of this matters. You should just get an app on your phone, attach it to your bank account, go check out some funny penny stocks or whatever. Have fun. It's just fun. If it's play money, if it's fun, don't worry about anything. If you want to get more serious, though, it's a little different. Now, if you're looking to make a serious long-term investment, large sum of money for the long term, that is a completely different deal than playing around with penny cryptos and all that stuff. In that case, you're looking for the big boys. Now, Bitcoin is the number one. It's the OG. It's the number one coin that there is. It has been forever. It may well be forever, at least for a long time. It's not going away. It's not going to, ruin you. It is the thing to do if you want something that's worldwide, recognized everywhere, totally solid. I don't have that much Bitcoin. I love a Bitcoin, but I like other things. And one of those things, the number 2 coin, is Ethereum. Now, Ethereum is a platform. It's really, really cool. It has all this other ramifications. Very cutting edge, very opening up the world to crypto. Whole different ball game. Much more use case concepts involved. And so, if you wanted a solid place to park your money that was a little more flexible than Bitcoin, but not necessarily as big, maybe Ethereum. Now, there's some other ones right behind that. Litecoin and Cardano come to mind. XRP's kind of up in the air. All kinds of stuff out there. Lots of fun altcoins. We could talk about Uniswap and PancakeSwap and all that stuff all day. But let's say that if you want to go on Tier 3, currently Tier 3, you're in Litecoin and Cardano. Now, these guys should be going up dramatically over the next few years. They should be in Ethereum, Bitcoin type spaces. So that's a good place to go if you're half and half. Like you're half gambler, but you're half security minded. Okay, go into that realm. Stay in your top 10. If you really don't want to have any fun at all, you can go to something like a Tether, which is simply a coin that duplicates the dollar, and it's basically sitting there the same as dollars. Very important for some overseas stuff, very important for some of your trading, to understand the dollar emulating coins. That's pretty important. And other places that you're in, other currencies that are called fiat. We should talk about that, right? Fiat. It's an old Latin word. Basically, fiat currency is the stuff that people considered real money. So this is dollars and pounds and euros and yen. That's fiat money. We call it fiat money because it has this sort of official nature about it, whereas cryptocurrency is a different realm, meant to be decentralized, meant to be non-governmental. It's a different type of currency, a different type of understanding. So that's the basics. Cryptocurrency is a very big deal nowadays. And if you don't understand the basics of it, there's a whole lot of stuff out there on the basics of it. But basically, the concept is a creation of an alternative money source where people could deal directly with each other without having to have banks and large institutions in between them, without a lot of government regulation, without a lot of big banks tracking everything, and not in a shady way. In fact, it's the opposite of shady. Some people make the mistake of believing that because this stuff is all internet based and it's all this high tech wizardry, that it's based around being some kind of shady, weird, dark webby kind of coinage, thing. And it's the opposite. The first thing you need to understand if you want to understand crypto is what a blockchain is. And a blockchain is a chain of blocks, right? Those blocks are information packets. And what that is about is opening up information to the world, having hundreds, thousands, millions of people tracking data. Think of it like this. If you had 10,000 geeks and they were all securing the same information and they got rewarded for it, and if somebody messed up, they got called out, and they got the person who tracked it and called it out got rewarded, you would have a very safe information system. You would have an information system based around the idea of actually truthfully and transparently tracking information. This is what a blockchain is. This is why it's such a big deal. This is why your money and all your transactions are being tracked in a completely transparent way with no central authority is so much safer than a bank. What's the banking era average? You go work at these banks, you put your money in these banks, you move your money around, and what's the error average? I want to say it's something like 8 to 10% average a year of errors at banks. Let's say it's 5 to 7. Let's say it's low. You know what the average yearly error rate on the blockchain is? Zero. Absolutely zero all the time. No errors ever, period. There's too many people working on it. There's too many computers dedicated to it. There's too much reward. There's like a 6 Bitcoin reward for being the fastest, most accurate tracker as a Bitcoin miner. That is like, what is that, $300,000 typically? A little less today, but whatever. Okay. I mean, come on. You're getting these rewards, whether it's Ethereum or whatever it is. This is why this system is so safe. It's dramatically more accurate, more transparent information than a bank. So that's the basics of crypto and why you would want to do it. But now that you have your security set up, now that you have everything ready to go, and you want to make your move, what do you buy and how do you read these charts and how does all this work? So let's dive into the basic concept of how to figure out crypto and how to analyze. And you need a sort of an approach. So let's talk about 3 approaches. I'll jump over here real quick and we'll talk about 3 approaches. Okay, this is from New Wire Investor. This information's everywhere. But let's just talk about 3 ways to analyze cryptocurrency for trading. This is a simple concept. 3 ways to analyze: technical analysis, fundamental analysis, sentimental analysis. Let me explain. Technical analysis is where you look at these charts, you try to figure out ups and downs, you try to figure out patterns and slopes and triangles and pennants, and you do all these things to do technical analysis. You look at market caps, you look at how much room there is to grow in a given crypto, you look at how it's performed in the past, you try to analyze how it's going to perform in the future. You do intricate, fascinating technical analysis. This is what most day traders do. This is what most people do that are super serious about all this. Technical analysis. Does it work? Well, the problem with technical analysis, of course, is that the market is fickle. It goes up and down and changes all the time. So maybe you get this concept and maybe you make mistakes with technical analysis. But that is obviously the core of what most of us do. Now, fundamental analysis. Fundamental analysis is where you're looking at the company. You're looking at the structure of this is the fundamentals of a company. Now, what am I talking about? Most of these coins, most of these systems are real. They have actual companies behind them. They're doing actual things. They're solving problems. They have a thing called a use case or multiple use cases. And a use case is where this company is actually going to be used, right? So you take something like Amazon. The concept is you order this stuff, it comes to your house. You can buy things online. That is a major use case. It is a powerful company with amazing management. This is a fundamental analysis. If you would have known that, done that fundamental analysis in the beginning of Amazon, when the stock was really low, and you would have seen the team behind it, and you would have seen the use cases and how powerful the idea of Amazon and books and everything else, your furniture and everything else being shipped to your house, even without knowing something like, say, COVID was coming, you would have known this was a very big deal. That's called fundamental analysis. So in this case, you look at a crypto, you look at that currency's team, the company behind it, what's called a white paper, which is the analytical description of everything about it, sort of like a business plan in a way. You analyze the white paper, you analyze the company, and you decide, do I believe in this company? Some recent examples are something like Cardano being active in Africa, making a deal with the Ethiopian government, trying to do fundamental change in the economies of Africa, improving multiple countries and making people's lives better, understanding that they're going to provide, using blockchain technology, things like ID cards and proof of your education and all these other things. Can you imagine how amazing that might be? Or the concept of VeChain, pulling out plastic from the ocean, using crypto to power environmental efforts. This is called fundamental analysis, understanding what someone's doing, what some company is up to. Very big deal, very cool, very fun. But difficult, not an easy thing to do. Trying to analyze all that, read all that information, that's something that not a lot of people want to do. But that's what fundamental analysis is. So technical analysis is looking at charts, looking at price movements, looking at trends, and figuring out where things are going using technical analysis. By far number one. Fundamental analysis is looking at the company. Now, what is sentimental analysis? What is the third type of analysis? Well, sentimental analysis is just that. What about sentiment? What about people's emotions? Now, this is very important. Let me point out to you right now how important that is, because you've got to understand that people are going to have emotions, and emotions are going to drive markets. That the last few months is a perfect example of that. You see people's emotions driving markets. So you want to know that. Now, let me explain what I do. I do all three. I think that a lot of the leaders, and I'm not saying I'm a leader, I am definitely a noob compared to some of the people out there. But what I do is all three. I mix them together. I want to do technical analysis. I want to see where prices are moving, what trends look like, what these pennants and flags and triangles and all this, movement and chart analysis and all these different techniques do. I want to analyze technically. I want to understand technical analysis. But I also want to do fundamental analysis. I want to know what a company's doing. Do I think this company's going to last? This doesn't always work. The best example in history so far is Dogecoin, right? Dogecoin has no technical analysis. It has no actual company. It's a meme coin. It is nothing. It is meaningless, except that it suddenly became meaningful. And the reason is the third thing. And the third thing is sentimental. So people's emotions. They heard very powerful and interesting people talking about it. They thought it sounded very cool. They bought into it low, got out high. Everybody talked about being Dogecoin millionaires, and here we are. It's a thing. I'm not mad at it. It's a thing. But that is not a deep company with a strong set of leaders doing a major thing to help the world. That's not what that is. That's just for fun. It started off as a joke. But that's why you need to look at things like the third thing, sentimental or emotional or personal analysis, how people work, social analysis. So, technical, fundamental, company, social, sentimental, these are your analysis concepts. Now, if I were to pull you over to, say, a chart that you could see other things, you're going to see all these like ups and downs and all these zigs and zags. So let's you look at something like this and you say to yourself, what is that about? Look at this thing. Look at all these numbers. Doesn't this look complicated? Doesn't this look scary to people? You look at this chart, you're like, oh my goodness, what is all this? Red and green and lines and this stuff. Oh man, this is so crazy. Don't panic. Look at this. Don't worry. Let me show you what this is. These are a thing called candles. You see how they have the little lines? That's the wick. You see how they have a body and a little line? That's the wick. These are candles. Red means we went down. Green means we went up. And I'll just show you a little picture about what that looks like. So just take a look at this. So if we were to go here, I'll just do this. Look, you see this? Bullish candle. That means we start low here, we go high here. Bearish candle means we start high here, we go low here. This is what a candle is on a chart. This is a chart. This is a candle. This is what it looks like. Now when you go back to your chart from here, you can see how those things get used, right? You see those? So look, there they are. All your little candles with all your little wicks and all your little stuff, right? And that's exactly what we're talking about. Okay? Red means we went down. It started high up here, went down to this low. Green means we went back up. We started low down here, went up to this high. And what you do is these purple and red lines and green lines here, all these lines are tracking patterns, the midline of all these things, where they're probably going to go. This gets confusing right here. But that is how we track a chart, and that is what a chart is about. So, to conclude, it's very simple, okay? You've got these charts that are used for technical analysis. You want to combine understanding the company and fundamental analysis, and you want to combine that with your understanding of people and psychology and all that. If you put all that together, you get a pretty clear, way to understand where things might go and what direction they might go in. But that is a quick look at how you analyze technicalities. That is Lyric peeking out of the curtain behind me, and I am finished. So this is Dr. Chef signing off for tonight. Crypto 101 Part 2. Thanks for paying attention. Smash some like buttons, do some following, do some notifications, and say hi to Lyric. Thanks for playing. Talk to you all soon.